Hello dear traders, I'm Anna Kasatkina. You're watching the latest combined review of Forex and stock markets. On Friday, the dollar growth versus its major rivals was quite modest. However, by the end of the week, the American currency turned out to be in the red as the US Treasury bond yield declined. It happened amid investor worries over the Fed's tapering of the bond buying program. Even though some Federal Reserve representatives said the stimulus program will end this year, the greenback got no support. Meanwhile, on Friday, all eyes were on the Canadian dollar. It plunged from the high for a while after a disappointing report on employment change in the country. Canada's economy lost as many as 39,400 vacancies versus the expected growth by 10,000. The rate of the American dollar constituted 1.0280 Canadian dollars, which is 0.5% below the Thursday's close. Right after the publication, the dollar was traded at 1 Canadian dollar and 3.51 cents. Moreover, the Australian dollar rose by 1.1% to the mark of 91.96 US cents. The currency rate climbed on statistics from Australia's main trade partner. China's industrial production beat expectations in July. It increased by 9.7% in relation to the last year. Furthermore, the retail sales in the People's Republic of China contracted just slightly. In the meantime, the euro and pound lost some of the weekly gains versus the US dollar. The euro sagged from Thursday's level of $1.33.84 to $1.33.40. By the end of the last week, the euro versus the US dollar pair strengthened by 0.5%. In its turn, the British pound slipped to $1.55.05 from its Thursday's quote of $1.55.37. It added 1.4% in a week. Both currencies, the euro and the pound, hit 7-week highs at the start of the last week, amid encouraging European statistics. To be more precise, Germany registered a better-than-expected increase in factory orders, whereas Britain boosted its manufacturing output by 0.7%, the most since December of 2010. Analysts took the latest PMI and other reports as a precursor to the positive Eurozone GDP trend. Elsewhere, the mood on Wall Street was rather gloomy on Friday. The shares of leading global specialty retailer Gap cheapened by 3.1% as the rating of Susquehanna Financial Group was slashed to neutral from positive. The reason for the downgrade consists in a quarterly earnings report, according to which clothing sales in July grew slower than expected. The quote of JCPenney company's stock sank by 5.8% due to a tussle between the key company's shareholder and its top managers. Bill Ackman, head of Pershing Square Capital Management, owning 17.74% of the JCPenney stock, expressed an intention to find a new CEO for the corporation. This was the latest combined review of Forex and stock markets. Thank you and see you next week. Bye.